Red Lobster made billions of dollars. So, how did it end up going bankrupt? Well, it all started out with Bill Darden in 1968 in Lakeland, Florida. His idea was simple: bring affordable seafood to the masses. And if you didn't live on one of the coasts, you could still get fresh seafood without breaking the bank. And honestly, people loved it. Then, in 1970, everything changed so quickly. General Mills acquired Red Lobster. Yeah, that's the same company behind Cheerios. Because nothing pairs better with shrimp than cereal executives, right? Nevertheless, by 1978, Red Lobster started growing at a rapid pace. They already had 236 locations and nearly $300 million in revenue. By 1991, they've already got 568 restaurants and $1.5 billion in sales. Then, in 1995, General Mills spun off Red Lobster into Darden Restaurants alongside Olive Garden. Now, when this happened, it wasn't a random move by General Mills. It was a classic corporate strategy. They wanted to focus more on their packaged goods business, being Cheerios, and their other brands, and basically allow the restaurants to grow organically. When that happened, Olive Garden and Red Lobster were toe-to-toe as industry leaders in the casual restaurant category. But at the time, Red Lobster was the crown jewel, which is kind of crazy looking back at it now. So here's the beginning of the problems. Olive Garden kept growing, and Red Lobster started to plateau slowly. I mean, it was still making money, but just not growing at the same rate. Then, in 2003, they tried something bold. They started the Endless Crab promotion. Unlimited crab. Yeah, you heard it right. And people went crazy for it. I mean, like, I haven't eaten in 3 days. Bring me another plate crazy for it. But there was just one problem. The math didn't work. Customers overloaded the restaurants. The kitchens couldn't keep up. Wait times exploded. Service quality dropped. And crab, if you didn't already know, it's expensive. So the more people ate, the more money the company lost. And it also attracted a different type of customer. Not families. They're called maximizers. Now, you know the type, calculating crab per dollar ratios like it's the stock market. And then shortly after, the president at the time, Edna Morris, actually had to step down, which was corporate for, yeah, that didn't go well. Because of this blunder, Darden started investing less into Red Lobster and more into Olive Garden. Consequently, Red Lobster's sales began to lag. Then, in 2013, Darden sold Red Lobster for $2.1 billion to a San Francisco company called Golden Gate Capital. Now, remember Golden Gate Capital for later on in this video. So, at the time, Red Lobster owned a lot of its real estate, which meant it had no rent, and it kind of had a safety net. But then, Golden Gate made a move, a big one. It's a common corporate strategy. It's called a sale-leaseback. So let me break that down. Basically, they sold the land that Red Lobsters are sitting on to investors, and then they rented the buildings back to Red Lobster. So, almost overnight, Red Lobster went from owning everything to paying rent on everything. Now, in the short term, that's a ton of cash for Golden Gate, but in the long term, not so great. Now, Red Lobster had huge rent payments on hundreds of locations, long-term leases with zero flexibility. And these leases were usually long-term and very expensive. Rent had to be paid no matter how the business performed. So, when sales started slowing down, rent became a massive financial burden on the company. And the locations that were once safe, because they owned the land, now became liabilities with crazy overhead. So, in the past, if a store wasn't performing, they could just close that store or relocate. Now they were stuck in leases. If sales slowed down, the bills absolutely did not. And stores that used to be assets became expensive problems. Then 2016 rolls around and Golden Gate decides to sell 25% of Red Lobster to a seafood company called Thai Union. Then in 2020, they sold the rest of the company to the Seafood Alliance, which Thai Union is a part of. Now, speaking of 2020, we all know what happened there. COVID hits. Basically, all restaurants start to struggle, and Red Lobster is absolutely no exception here. People stopped going to restaurants. There were large shutdowns, and a lot of restaurants were hurting. And at this time, it's tough running a seafood restaurant in the United States. Not to mention, let's say you're just going out for a random dinner with a group of friends, and one person doesn't like seafood, you're probably not going to go to Red Lobster. Not to mention, if someone is in the mood for fish, most steakhouses have fish on the menu as well, which wasn't a great thing for Red Lobster. By this time, the current leadership starts falling apart, and the longtime CEO retires in 2021. Probably a good time to clock out, honestly. And after that, it's really been hard to find the right leadership to get Red Lobster back on its feet. Even to this day, if you ask a lot of industry experts, they've gone on record saying that Thai Union doesn't know how to properly run the restaurant business. And they came in wanting to cut costs, cut staffing, and weren't really focused on the vibe. They didn't really come up with the right turnaround plan to get things back thriving. Also, with Thai Union, this is a seafood supplier and now part owner. Some people started to ask questions, like, why is Red Lobster paying more for shrimp than everyone else? Now, Thai Union's gone on record saying that's not true, but people still joke about the Thai shrimp mafia lining their pockets while Red Lobster struggles to stay afloat. Allegedly, of course. Then, in 2023, they decided to take a big swing and turn their popular promotion of endless shrimp into a full-time menu staple. Someone in the corporate office had the bright idea to sell endless amounts of shrimp for $20-25. Now, this was not a game for the people who take eating seriously. I mean, endless shrimp? Let's go. But this time, let's make it permanent, is what they said. $20-25, all you can eat shrimp. And once again, people went crazy for it. We're talking about people who are eating 20 shrimp, 40 shrimp, 50 plus shrimp per visit. And at that point, you're not even hungry anymore. This is personal. They're trying to take you out. And in one quarter, just like that, they lost $11 million. Now, to be fair, endless shrimp lasting too long isn't enough to take out an entire nationwide business. So I'm going to break down the things that cut the rope after an already bad stretch of misfortune for Red Lobster. First was high labor cost. With the cost of living rising and the wages going up, had labor expensive, and Red Lobster wasn't immune to that issue. Second, let's not forget about those expensive rent payments that were due every month since the Golden Gate deal. So a bunch of the restaurants needed out of those leases. And it's like everything just hit at once. High labor costs, massive rent, expensive supply chain. Either way, after all of this together caused Red Lobster to file bankruptcy in May of 2024. At this point, they're just trying to figure out what to do with all the debt, who's going to run and turn around the company. And really, Thai Union says it wants out of its Red Lobster investment in general and says it's actually going to take a $530 million loss on the deal. So almost overnight, over 80 locations closed abruptly. That means a lot of workers are out of work, suppliers are in trouble, and these businesses just kind of fell off the map. Now, if you love Red Lobster, chances are it won't be completely disappearing altogether. In fact, in 2024, Red Lobster brought in a brand new CEO, Damola Adamalekan. He's just 36 years old, and he's also the former CEO of P.F. Chang's. Now, he's young, but he's known for turning around struggling restaurant brands. So on paper, he was exactly what they needed. But what he walked into was a mess. The company had just gone bankrupt, dozens of locations were closing down, and internally, employees described morale as very low and beat down. Instead of coming in with flashy promotions, he did the opposite. He focused on fixing the business itself, improving operations, making the food and experience better, cutting back on money-losing deals like endless shrimp, and slowly introducing new menu items and remodels to the stores. Because at this point, this wasn't about driving more customers. It was about something much simpler, making the business actually work again. And that is the real story of Red Lobster. It wasn't just shrimp. It wasn't just bad promotions. It was a business that slowly stopped being run like a restaurant, and it started being run like a financial asset. And by the time someone came in to fix it, there wasn't much left to fix. Because sometimes the thing that makes the most money in the short term is the same thing that destroys the business in the long term. Now, we're all looking forward to seeing what Red Lobster can do with its future. I know I am because I love their shrimp. And that is the real reason why Red Lobster collapsed.